Hello and welcome to LedgerCast. My name is Brian Krogsgaard. I am here with Josh Olswich. Hey, Josh.
Mr. Brian, how are you? Do we have a special guest, Lucy, today?
We have a special guest. My dog is right here staring out the window. Oh, she hears you. She's ready to bark at anyone and everyone coming by. So be prepared, friends of the show, for a Great Dane bark fest as we're recording a little later than normal today. So it's like the mailman, the delivery people, the after-school kids. We got everybody on board with us today. And we're trying to find out if frickin' Bitcoin has topped or not. I mean, the local top, not bull market over type of top, but destroy my altcoins and go down 25% type of top. That's what we're looking for.
Isn't Bitcoin top bullish for Bitcoin or
well,
bullish for alts though?
What has happened historically? See, what happened was usually alts will pop after, like, as Bitcoin bottoms, like then they run up together, or altcoins will pop as Bitcoin consolidates. But usually as Bitcoin goes down hard, altcoins will go down harder for that first bit, in my experience.
Okay. So what we want, if you're long altcoins, you want to be happy for
if you want
sideways BTC, right?
Yeah, either sideways now or being out of everything but ready to buy the crap out of like a capitulation, and buy some altcoin bounces essentially. As our buddy Aaron Lammer says in the chat, he's here, so it's probably the top. He's from Coin Talk, one of my good friends. We've been talking a ton about DeFi stuff, and Aaron, I don't think you're top things, but we have seen I've seen like 3 different rappers talking about crypto today, so that's not good.
I've been getting a lot of messages asking me where I think the top is. So yeah. I don't know. Is that a top signal?
I don't know. If people are looking for the top, then it can't be the top, right? But
I don't know. I was looking at 2 things. I was looking at the MA multipliers again, because that's really all I have to go off of at this point.
Yeah.
Other than the pitchfork, which we can debate, but the BTCMA multiplier top is around 48 right now, and that's going to move up slightly over the next couple of days. So I was thinking, okay, we have let's set a story, right, for the top. We have the MA multiplier around 50K. Historically, we tap it and bounce down like we did in 2017. We have CME rollover and January 29th. So maybe we go to 50K by January 29th. That's my BTC outlook anyway. And then for ETH, I was looking at the same thing, and that's around 16 to 18. I don't know if ETH has the fuel to get there on the first stab. I think for ETH, we actually supported the midline before we tapped the multiplier, but I don't know. And then if you look at the ETH
midline be?
Yeah, I can pull that up. But if you look at the ETH pitchfork as well, we are outside of that pitchfork, drawn correctly.
You and I fought about this for, I don't know, 30 minutes the other day.
Because I just, I'm an expert because I did a video on it the other day. So,
And I think you're wrong.
And I'll show the points and we can talk about it. But according to this, the most sanest pitchfork, we are in the danger zone as far as being overbought. So, it's rare that we just keep going past this pitchfork. Already we are one wing above where we should be. So it's definitely in danger zone territory from that aspect.
Okay, well, we're going to have to fight because I'm just saying my pitchfork, it was here, and guess where the top was? Right at the top of my pitchfork.
So both of us are saying top then.
Yeah.
Conversation over.
Yeah, but no, there's clout involved here. But my pitchfork is only rooted back to December 2019, and yours goes back to like the all-time low or something in late 2018. So mine's a little more localized, but my pitchfork says we just topped, and we probably need to go bounce off 1,000 and ride the top channel, and then maybe we could break out of the all-time high and and go on from there and hit 2K by May. Shut up.
Come on, loose.
Come on. So that's my thoughts. You talk.
Yeah, so if we look at the ETH, the one that I drew, it's higher data capture. That's the biggest thing. The second thing is this midline anchor is a diagonal fitting price perfectly, which isn't necessarily a criteria that you'll see in any Pitchfork site, but to me makes the most sense. And I'm not picking this excess top here. I'm picking this one.
Why?
And
Why?
they're both.
Explain the lack of not picking the top.
This, number one, it's more conservative, and number two, the diag fits the data. You're trying to fit the data as best you can, because then that means that price is acknowledging those levels. I mean, look at this here, look at this here. It just fits all the data better than if we just go, oh, it's just this. And, I don't know. To me, this looks worse. Sorry, this looks worse than this. This is highly...
This just goes into why I don't like pitchforks, though.
It's subjective on purpose. It's the only subjective thing I use other than, I don't know. Everything else isn't subjective, but it's okay to be non-subjective on some things and subjective on others and have rules for yourself,
Yeah, but no matter what you're looking at, your pitchfork or my better pitchfork, either way, both say...
Wow.
Either way, both say that Ethereum on that subjective metric doesn't look likely to breach this all-time high in the first go, and might take some time.
Median line's at 990, by the way.
And Bitcoin looks awfully toppy too, like just that it needs to consolidate. Doesn't mean it has to dump 30% right this moment. We talked about how we wanted to share going into Q1 or the first week of January. We wanted to talk about where the pivots were, the yearly pivots.
Oh yeah, that's right. It's already been a week. It's crazy.
Yeah. So I would like to formally open session for yearly pivots. And what I find amazing, am I looking at this correctly? Did we really already go to R2 in January?
We did.
Oh my gosh. Oh, I need to fix them up. So on Bitcoin, we went through R1 already. That's just nuts. And R2 is at 46. So why don't you talk to us about the pivots, pivot levels, and kind of maybe what we've seen in the history and what we could see here if we have a continued very bullish year.
Sure. So generally the pivots are treated as a ladder. At least that's how I think of them. They're calculated based on the highs of and lows of the previous year. So right now it's predicting basically 100K as far as the expected top for the year. Now you can add R6, R7, R8, R8, 9, but historically for crypto, if we're bullish, we get to R5. If we're bubbly, we get way past R5.
But what's crazy is in any normal market, that's really a gigantic pivot.
Right.
R5 is insane. However,
there's a reason that they don't add anything past R5 on this indicator because it typically doesn't even happen.
Yeah. So for a little bit of perspective, here's me putting on the S&P 500. And last year it got to the R2. The year before, it got to R2, and then if you went to February, extrapolated, it would have gone to R3. But R1 or R2 is pretty high, pretty well extended for the legacy market.
And it's supported on the S2 on that March dump too.
Yeah, they turn it. It's level. It's like going level to level without having to draw it yourself.
Right. So lows for this year, 12K. Anything below 12K is failed experiment. Bull run is definitely over. If you look at where we actually supported in 2018, it was the S1. If I add that real quick, S1 was support for BTC in 2018. We didn't actually hit the S1 in March of 2020, but right now, S1 12K. If we go below 12K, it's over.
Yeah, I mean, the supports on like Bitcoin is so parabolic every year, whether up or down, that the supports some years are literally negative. So I mean,
right, like
if
right
it
now
goes
the
below S1, you're screwed.
S2 isn't even on here because it's so
It's
low.
literally like it breaks the formula for pivots.
Right.
However, the resistance side of these pivots has historically been impactful for like reaching local targets and causing some congestion here or there. We talked about it towards the end of last year as we were hitting R2 and R3 and R4. You know, like we were like, okay, these are these are levels to pay attention, and that's exactly where we had that congestion every single time. Like, and we've had proof of that over and over again in the bull market in 2017. I'll just always remember it because I was following you and Hearns, who's a OG Bitcoiner, and after we had busted through the R5 and we're coming back, you talked about the R3 level, and he was like, that looks like a good place to bounce off of for like a new floor or whatever. And we did, and we just went straight over it, and then, I mean, we went so far beyond those resistance levels, but yeah, they provide worthwhile targets. And one of the things these hint is, you know, we talked about our targets for the year, which look like they could fulfill themselves way sooner than we said. R3 was 63K, which is what I said would be the top for the year. So that would be a pretty lackluster year. So we could go a lot higher than what my target was, but my point was on a longer market cycle. Like if we're topping right now, we could spend an entire quarter between, say, R1 and R2, something like that. You know, it depends on how impacted are we by the fact that we're a macro asset now. And
Well, here's something else worth like finding data on is how often we top or bottom at pivots, because just anecdotally it looks extremely strong, extremely strong.
Like if you just want to, if you pass a level, target next level, which would also indicate that I'm wrong today, saying that we hit the Q1 top, and it would tell you, no, we're going to go straight to 46K at least.
Yeah. So I don't know, just like looking at all these levels, they just pop out to me like hit, you know, hit, resistance, hit, resistance, hit, resistance, hit, resistance. We stopped at R5 at the end of the year. Like, I don't know. Looks like there's something there to me, but yeah, so R2, the next level up is 46, which would be close to 50K. Another thing, we're not really bear diving yet, as strong as this is on the daily.
Yeah.
If we start bear diving into a yearly pivot like we did in June 2019, that's a really good sign that that's a top. We bear dived into like the new yearly pivot in December 2017. So that's something to watch for up here.
And we have a lot of new listeners. So Josh and I talk about TA a lot, technical analysis. What we're doing is we're charting stuff to try to see what could come in the future. It's no guarantee, but we learn something from every little thing that pops up. A divergence or a bearish divergence is where price and momentum are going different directions, and relative strength index with the RSI is a tell of momentum. And if the RSI starts going down, which the daily is at 89 something right now, the weekly's higher. If it starts going down while price continues to go up, that's what you would call a bearish divergence and could help signal that a top is on the way. Sometimes too, you could just look at something like how high is the RSI, and does it give you a sign that we need to cool down? Something I've noticed recently is that our weekly RSI,
95.
Yeah, it's at 95.18. And you have to go back to the 2013 top, which was like maybe the craziest Bitcoin bubble that we ever had. Both the March 2013 top and the November 2013 top are the only real 2 points in Bitcoin's chart history that are higher than what we are right now. So you can say, we got a long way to go, but we're also running extraordinarily hot right now. And it's hard to call a top in that scenario, but saying we're not going to have some 30% drawdown is just unlikely. Like we're likely going to have a significant drawdown when we have it, because the higher we go now, the more likely that drawdown becomes bigger, similar to what we ran into in July 2019.
Yeah, and I have no issue with that. We need big drawdowns. We need panic. We need media. We need people to question why they got into Bitcoin. We need people to lose money. Sorry, that's just the way it is.
Money leaves the hands of the many and goes into the hands of the few.
That's sadly how it's going to work historically, and how it's going to keep working going forward. So, even like the daily cloud support is at 28.7 right now.
Yeah, and what I've talked about over and over again in this show is how strong the 20-week is, which you can see this white line is a 20-week moving average. The green line is the bear market dead bottom every time. That's the 200-week. The 20-week's more like, where do you buy the freaking dip in the bull market? And you can see it's just tap, 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 tap throughout 2016 and 2017. And even historically, like all the way back to 2012, like the 20-week just works fantastically in all markets. The 20-week moving average is at 17,200. I'm not saying we have to go to 17,000. I'm saying that moving average needs to catch up. Price needs to mean revert, whatever you want to call it. We're going to tap that 20-week moving average during this bull run. And I don't know where that 20-week will have moved to, but I could believe like 23K. Like, I know that sounds crazy, 40,000 to 23K, but like we get good enough FUD, we consolidate for a month and then break down from that. That kind of thing is where you could get that, like, I mean, what is that, a 40% drawdown? That's a real possibility. Yeah,
because at some point, even the people wanting to buy are going to say, all right, I'm going to wait. I still think we're in the stage of people who are buying that don't care what the price is. I still think we're there right now.
Yeah.
But eventually,
like, oh, well, we're going to 250K, so I can buy at 40K. It's no big deal.
Well, it's not even that. It's just people wanting to get Bitcoin who, haven't been in and just don't care, right? Like they're just hedging, or they're saying enough's enough with what's going on elsewhere in the world. I don't know, whatever their individual situation is. They don't care what the price is, it doesn't matter to them. So I still think we're there. I don't think those people have bought yet, at least entirely. But yeah, we're going to get some nasty 50%, 30 to 50% move down. It's just going to happen. And hopefully that's not the end of it as far as the run, but 50K by the end of the month is possible.
Yeah. A lot of people are saying we'll never go below 20K again, which I can almost believe that, even though you and I both talked about how we thought we were going to pierce 20K. That's a 50% drop from now. So if we go higher than that, like, it's just harder and harder because there is inherent demand. But we could have legacy reasons that cause big issues in the ecosystem. At some point, there will be an incredible buy opportunity. I do not know where that is. I've been talking to my dad some about markets in general, but he's fascinated by Bitcoin because he had some in the last bear market that he bought a little too early, but he's an obviously good profit now. And we're talking about whether to sell and wait or whether to buy the dip, and he's ready to buy the dip. And I think that's kind of where a lot of people are running into is, at least right now, they're saying, hey, I'm ready to buy the dip. The question is, when we go down from 40 to 30, will they be ready to buy the dip, or is that going to turn people scared? And then, kind of leads the way to a bigger dip, because when you make those dumps down, there's always some kind of narrative involved to make it scary to buy the dip. Like, buying the dip is never as easy when the dip is happening than it sounds once it's over.
It's easy for the people who have a plan and are ready. It's hard for the people who are waiting to get in, don't know what they're doing, and thinking to themselves, I'm not buying this here. It's going down too fast, right?
Yeah.
That's why you just put your bids in now. You just forget about it, right? Like, yeah. I don't care what happens. I know where I'm buying. That's what you got to say to yourself.
Josh, let's do a hypothetical, because we may have some listeners that are have a hypothetical desire to enter. Now, we're going to do that hypothetical in just a minute. But first, I also Want to let folks know that if they are planning to enter crypto, they should try it with Matcha, because if you use Matcha by going to ledgerstatus.com/Matcha, it's completely non-custodial, and you can trade not only wrapped Bitcoin and Ethereum, but anything that is an ERC20 or Ethereum space token. If you want to get into DeFi stuff, if you want to play the altcoin markets, I loved using Matcha. I use it for pretty much all my volume right now. Ledgerstatus.com/Matcha is a great partner. It's made by the team at 0x. They actually, the 0x protocol has a vote going through for reducing their fees by like another, or not their fees, but like the price of a trade by another like 60 or 70%. So, yeah, 0x is improving, and that'll help Matcha as well. It's a great platform. Go to ledgerstatus.com/Matcha. ETH is expensive to trade on right now, but that's not their fault. They make it as cheap as you possibly can using a DEX. So
the issue with stuff like DEXs or ETH related stuff is you can't onboard. So if you're truly a crypto non-person, you can't.
Yeah,
you got to onboard somewhere.
Yeah, you got to onboard somewhere, but you can do your trading on Matcha once you get onboarded. Right. We'll talk about some good onboarding places maybe next week, but. Yeah, so someone wants to get in, hypothetical, we have no Bitcoin. We're ready to buy. Cash is set aside, ready to buy. Where are we setting bids?
We already talked about yearly pivots. If you want to be aggressive, you're setting bids at 37. That's the R1. If you want to be less aggressive, you're setting bids at 21. If you want to use trend following strategies, you're setting bids at your 20K or your 20-week SMA. You're setting bids at the cloud key June, which is this red line at 29K. And you can always stagger those, all over the place. You don't have to. I think so many people, all they want to do is they want to buy and sell everything all in, all at once, all the time. Like I think that's just human nature. It must be, I don't know.
Yeah,
totally. But the way you need to do it is to set bids around several levels, or just have levels in mind, and just buy at those levels, sell at those levels, whatever. But you can't think of it as a binary thing where I'm buying everything here, I'm selling everything here. It should never be like that.
Yeah, I have I have a few on my chart. Josh, you just showed a what do you call that? A trend following place to do it. What I did was I just drew. I'll delete what I called the Pico dip buy, because that's the that's the intraday recovery. Here's the 20-day moving average, and here's a horizontal cluster. So like, where did price sit for a bit before it broke up before, and then another price. These are two that are important to me. And then the 20-day moving average is there because it's also a nice round number for 30K. So piercing 30K would take us to the current 20-day. So this 20-day will move up. By the time we could dip that far, it'd probably be around 30K. What I think is probably the lowest we can actually get is 23 to 24, which is this cluster. And then the next one where we actually consolidated for, it didn't feel like a long time at the time, but it was 22 days without a new high. So 3 weeks of consolidation before we broke the all-time high. That's like all-in territory at this point at 19 to 20K. And I think that'll get bought up sooner. So 23 to 24 is where I'd be totally willing to be all in with like new fiat, right? And
right.
And then 1920 is just like, okay, well, I'll wait, or if I have more, I'll buy, something like that. And then 30K is a psychological level that I think will probably just get tested at some point. Like, I don't think we go from 20 to 50 and never even go back to 30. You know what I mean? Like, it just seems crazy to me. So I think we will breach 30K. That's more of a psychological issue currently, because there's really no proof of it on like a level-to-level perspective, because we just had that one huge daily wick down to it. So there's not a great level that I can point at in that regard.
Well, you can always go to You can go to monthly pivots instead of yearly if you want like more if your time horizon is like, I want to buy now, looking at those.
I want to get in as soon as possible.
So 33K is a meme line anyway. So that's a decent monthly pivot as well.
Yeah. 30. First, we're saying the top is in at 42. It may not be. Like we said, we could go 46. If the top is right now, what we're saying is start your laddering potentially. This is not financial advice, but we have no Bitcoin, so we're trying to get in. Start our laddering at 33, buy at 30, buy at 27, buy at 23, and wait. I distinctly remember doing this in 2017. Sometimes I just market bought because I needed it in right now. And then other times it was, hey, when that dip was coming, I was one of those new people trying to get in. And I was like, heck yeah, 30% dip. I'm throwing in as much as I can possibly afford. And that's how I did it. Very similar methodologies. Those are specific levels. The other is, it doesn't matter where you're coming from. Just wait until we're down 20% and buy. If we're down 25%, buy more. If we're down 30%, buy more. That's divvying it up into multiple allocations. And I think on the bull run, you're going to be really happy with those buys. Can't be too terribly picky, because what happens is, and you can see this even on the small dip that we've had so far, this was a 1 hour wick that we had on January 4th. Was that January 4th? Is it?
Yeah.
Yeah. So this is an hourly wick that marked a 10% down move. So we started going down, but by the time just the wick part of that hourly was a 10% move. So that was your 20% move top to bottom. And you had about 5 minutes to execute properly. So you got to be ready to buy the dadgum dip.
And here's some more free alpha. I still have bids at 15K, just in case Kraken goes nuts, which historically has had issues with order book liquidity, just in case we get some crazy wick on that exchange to that level. You never know. You never know.
Crazier things have happened.
Yeah. I'm not expecting it, but I'm ready for it if it happens,
And let's transition to that a little bit, because one of the things that's crazy is these centralized exchanges, and it doesn't matter which one, pretty much all of them, like Binance and Coinbase and Kraken. Every time we get 5% of volatility, the suckers go down. It's like every single time. It's unbelievable to me.
Yeah, and I've said this before, probably a year or more ago, but having these exchanges go down actually increases FOMO, because when people want to get in and they can't, it just makes them want to get in even more.
It's like press the button more times. Like,
so yes, it's terrible and horrific and stupid and awful, and they should be ready for this by now. But it's going to keep happening. It's never going to stop happening. I'd love to see the numbers on what they're dealing with, but yeah, Kraken went down, Coinbase went down. I'm sure Binance had issues. I didn't read about it, but
it's been incredible to me that, how quickly Bitcoin went from like, no thanks, to absolute FOMO. It's like, this happened a lot faster than I expected.
We've 10x'd since March, right? We've 10x'd within a year, which is insane.
People absolutely hate buying things until they're pumping like mad. But once they're pumping like crazy, then they want in. All right, Josh, I want to talk some about the dollar. Oh, never mind.
Yeah, we can talk about the dollar. I'm just going to show this CME chart again, why I think January 29th, I have to fix everything because we wouldn't have gone up so much. But yeah, so this August 3rd to Jan 29, contract is up. What percentage is this? It is up 260%. So let's say you bought the open and you did nothing and it expires on January 29th. You are up 260%. So these I've talked about this before as well, but these quarterly contracts have historically been really good determiners of trend. So if we if we are bullish at the beginning or bearish at the beginning, it's typically the entirety of that quarter. We typically don't do what we did in December, June 26th contract and sort of squirreled around. Historically, I mean, this is an N of like 5, but historically, if it's all in, bull or bear one way or the other.
So essentially what you're saying is these are, we set period long directional trends often with these futures contracts. And let's explain some more. Josh, I have a feeling we're going to have new listeners this episode. We have new live streamers here today. If anybody wants to join us on the live streams, follow us on Twitter, and then it's at twitch.tv/ledger status. You can follow us for those and ask questions. From a seasonality perspective, dates are important for a variety of reasons, for taxes. But another one is going to be expiry dates, so futures or options, when things can impact price a lot. Futures is one of the biggest ones, and futures contracts allow people to speculate on the price of something at different times. People in the corn industry, they might short futures 6 months from now in order to secure a specific price that they have today. Bitcoin has the same thing, so like a mining company might use it. And what this matters for is it can allow us to have a date line in the sand to say like, hey, this is a period where we may have a shift in the trend. And Bitcoin futures operate on a quarterly basis, right?
They have multiple dates, right? I don't know what the exact term is for it is. One of these is quarterly, one of these is bi-quarterly, one of these like intra-quarterly. I don't know.
I think they have monthly for some even.
Yeah. But the big ones, the big time frames are what historically has mattered the most for trend. That's the first thing. And the second thing is the rollover dates. There's typically high periods of volatility, which is another reason why January 29th is good.
And part of what happens there is people are having to close those positions. And if they want to like re-hedge or whatever they were doing, they have to reopen them on another one. So like essentially creates a lot of volatility and action on that date. So as you get into this, you'll see some of these things talking about, rollovers and expiries and strike dates and things like that, and that'll matter. Another big macro thing that it seems like people are really catching on, but that I want to talk about is the dollar. Regular listeners are going to know because we talk about it a lot. Our new listeners is something for you to pay attention to, but the DXY is the dollar index, and this is essentially the world's view of the value of the U.S. dollar, and tends to align well with Bitcoin macro moves and also the stock market and all kinds of stuff. And as we have these money printing things happen, if we are going to have a whole bunch of stimulus and things like that, the buying power of the dollar goes down, dollar index goes down. What we see now is a multi-year level that we've approached. So I have a line here at the lows, but we've already kind of tested the consolidation point, which was the bottom for the Dixie in 2018, which was right at the top of the last market. So essentially it's presenting us with some evidence that we near at least a correction in the dollar, a move up in some degree, which sounds counterintuitive to the announcement that we just had that we're going to have a $3 trillion infrastructure bill and $2,000 per person of additional stimulus in the United States. But nevertheless, the Dixie looks like it could just rebound upward at any time, which would put pressure on Bitcoin and other assets. Even though we think the long-term trend is actually to breach those 2018 levels, and that's what we think could take us as far down as like 80 on this index and six-figure Bitcoin, right?
Correct. And if you look at the correlation data on Dixie versus BTC, it's 85+% right now. So
which means that an 85% correlation of how they move together.
Inverse.
Yeah, inverse correlation.
So yes, if Dixie goes up, there's a high chance that BTC will decline on that.
Yeah,
move.
And there's a lot of macro economic reasons why that affects like dollar liquidity in the market and what's happening, and essentially is going to have an impact on whether the number goes up or down. And it's just providing headwinds. So when I do a prediction like I did today that I think the quarterly top may be in, and essentially that we need to consolidate in Bitcoin, that might give us that chance for the 20 or 30% drop while the Dixie goes up a bit. But I do think whatever it will be a bearish retest, whether it's 91, 92, something up there, that next yellow line, and then we work our way back down. And then I think if this breaks, 89 breaks to the downside, I think we're going after 80 eventually, and that's the big move in Bitcoin, like the big move, 6-figure Bitcoin.
Right, and we talked about this last show too, but you can look at the historical trend of Dixie versus BTC, and it's no surprise that when Dixie is bullish, BTC has been bearish, and when Dixie is bearish, BTC has been bullish. That holds up historically since the beginning of time. So most of 2020, Dixie was bearish, BTC was bullish. I mean, it's right here in the correlation data. The VIX is also kind of at a low here. Do you think it's going to break 20?
Oh man, not really. I think the Dixie wants to break up, and I think it'll have headwinds on the stock market as well. I actually think with the presidential transition and all this stuff going on, and Raul, how do you pronounce his last name?
Paul.
I
think so, yeah.
Yeah, he had a pretty good thread too about how a lot of times in the new year people get hyped about buying stuff because they like clear up a lot of dollars to spend money at first week or so of the year, and then they get overexcited, and then they get blown out after the first couple of weeks, and then we're inaugurating a new president and sell the news on that. You know, like it's just, I don't know. There's a lot of reasons that kind of freak me out right now. The dollar potentially bouncing, a big part of that. So,
yeah, I don't know.
2 cents.
I like 50K max top before massive dip. I like Dixie up. I like 100K by the end of the year. One other thing, we were talking about pivots. Link impressively has hit the R5 pivot for the past 2 years. Currently, Link's R5 pivot is at $60.
Wow. So there's your alt season target. And that's what I want to finish with, is talking about what's all this mean for altcoins, because we got a bunch of degenerates in this chat. They want to know what's it mean for altcoins. Let's start with dominance. The high for dominance in 2019 was at 72 for Bitcoin, which basically meant Bitcoin was hyper dominant, and then that trailed all the way until Bitcoin started going nuts in September 2020 when we went down to 57. We broke above a 200-week moving average. This stuff isn't great to do TA on, but essentially we can see signs that Bitcoin dominance is potentially at some headwind. If it breaks up, I mean, it could spike up, but I think we're essentially going to, my view is that we've already had the first week of some pretty significant altcoin opportunities, but it doesn't necessarily mean it's the only one, or it's over, or anything like that, or there won't be pain in the middle. But I'm looking for this dominance chart to revert back downwards. I think there's going to be more opportunity for altcoins, especially here in the first 1 or 2 quarters of the year, before we go back to big Bitcoinness in the second half of the year. That's another seasonality thing that we've argued over the years. So yeah, I'm bullish on altcoins doing well, but if Bitcoin does drop, altcoins are going to feel that pain too.
Yeah, we talked about the what is it called? Expanding falling wedge?
Yeah, potential, whatever that is. Yeah, like broadening wedge.
Broadening, that's the word.
Which it broke up from.
Broke up from that, so it could support between 67 and 65 as far as dominance is concerned. But yeah, I don't know. You're more of an alt guy than me. I'm much more comfortable in BTC strength here, and everything else just following and catching up. This wasn't a cycle where, other than ETH, really, like alts move first. And you could argue in Q2 2019, right in here between January and April, that's when we saw LTC move first, EOS move first, and then BTC followed. That's not really what happened this time. This is all BTC
Yeah, I mean,
24/7.
Bitcoin just went wild. I mean, in order for Ethereum to get up to its all-time high here, the BTC pair recovered from the danger zone that we talked about 2 weeks in a row. And then this week was massively bullish and then got rejected. But what it's been doing is like it'll make these recoveries, Ethereum will, in like 1 day, you know, because Bitcoin could be flat and then Ethereum decides to go 10, 15, 20%. It went, what was it, 28% 1 day in order to save that weekly last week. So like we talked about how it was just gross looking on Friday. And by Sunday, it had this massively bullish candle on the ETH BTC pair. And Ethereum's one of the weirder ones. I personally think a lot of the action, a lot of the potential is in these DeFi big caps, but they're not big caps yet in terms of like everything else. So if you go to what are the like top 20 or top 50 coins in crypto, a lot of these DeFi coins are not really there yet, but I think they will be. So I think we're going to see some rotation in altcoins where, you know, maybe Monero and Monero's still a good coin. It just got pummeled, but like the things I'm not as bullish on are like EOS or Tezos or ADA. I think whatever they do are temporary type of pumps, because I think those other like layer one chains, especially the older ones, are just going to underperform the newer, shinier DeFi things, because Ethereum is extraordinarily high usage. So it does come with high fees, which is problematic. So that'll be a narrative that people play into, but people are using it. It has high fees because people are using it. These DeFi products are being built on Ethereum, and I think there's a lot of DeFi large caps that are going to flip some of these other coins. And I think we're going to see Aave, SNX, you know, some of these like Uni, the large caps in DeFi start to flip some of these, you know, stragglers of layer one empty cathedral blockchains of 2017 yesteryear. I have this DeFi perps, DeFi index pulled up because this is just a blend of like 10 DeFi tokens or something. And you can see since December 29th, and I talked about how I thought alt season was doing warm-ups from Christmas and started January 1st in earnest. These are up 50% so far this year just across that index, and we've seen far larger moves on some of them. But on the BTC pairs, like if you were to put these against BTC, it's a mixed bag. Like some of them have outperformed, some of them have underperformed, some of them are kind of messy and sideways, but none of them have like super pumped relative to BTC. And I think that's what I'm looking for once this BTC correction or BTC sideways occurs, is we'll actually start to see some of these DeFi tokens in particular do very, very well against Bitcoin, and we'll see like a alt season, if you will. For me, it's already here enough to the degree I'm totally willing to speculate on it. I am speculating on it. I talked about being in Bitcoin all the way through the end of the year. I moved a lot of Bitcoin and started dabbling, would be one way to say it, in altcoins by January 2nd. And I will continue to do so. How are you looking at the altcoin market?
Yeah, we talked about seasonality a little bit, but just to illustrate like why we think Q2 is the quarter, at least I think Q2 is the quarter, and how unusual Q1 has been so far. If you exclude pre-2013 Q1s from BTC, the average is negative 14% from start to finish of Q1. Dang. So just to illustrate how unusual this quarter has been so far. Obviously, we just started. We're 8 days in, but just keep that in mind. Historically, we are not this bullish in Q1, possibly for tax reasons, like we talked about before. But Q2 is where all the parties happen typically for everything, and alts specifically. If we look at ETH's Q1s, aside from 2016 and 2017, ETH's Q1s have been really bad, like averaging 12%, negative 12%. So again, just crazy moves so far. But even Ripple is up 42% this quarter so far.
Yeah.
So very, very
Ripple's
unusual.
is totally. I saw today that like $20 million worth of Ripple went back to the Ripple treasury, and I think they went and were the plunge protection team on it.
Maybe, I don't know. I don't think they can save themselves from themselves anymore as much as they have been historically.
Yeah,
But
I just think it was a short squeeze.
uh,
I want to. So you're basically giving the case that Q1, Q2 is the time for alts if they're going to have it, right?
yes, Q2 specifically. Now I haven't mapped out quarterly like ETH BTC moves, but apparently Q1 has been ETH BTC's best quarter. I'd have to look at that specifically, but that's worth looking at too. But
Yeah.
just looking at these numbers, Q2, look at any seasonality data for Q2. It's been insane for everything.
Yeah. One other thing that I wanted to highlight, just to reiterate that top 20 or, like what's going to move argument. If you go back to like 2014, 2015, you'd see stuff like Feathercoin or who knows what, that was in these top 20 coins. One thing about altcoins is if you marry them for years and years, very few are going to stay in these lists. Now, some tend to repeat themselves like against all odds, like a Litecoin or something, or Monero, but most don't, like the hype coins of the year or whatever. And I think some of what we see in the top 20 right now, XRP is still number 4, despite, the SEC sued them and it's vaporware. Cardano, obviously Bitcoin Cash, Stellar, Bitcoin SV is still number 14. EOS has done very poorly. Tron is just one man's slush fund. These are all in the top 20. And what I find fascinating is the stuff that's hyped now in the DeFi landscape. Synthetics is number 25. It's only a $1.6 billion market cap, I think, and that's one of the biggest ones. Aave, 1.3 billion. Uniswap, 1.2 billion. I think these can all be these can be the new era of $10 billion market caps. So I think Bitcoin will do really, really well. And I think altcoins will have periods of outperforming and underperforming, whatever. I would rather play these DeFi coins than I would any of those like gigantic layer ones, because these have real users. Like people are using the crap out of these things. Like we've talked about this over and over again all last year, the amount of money that's locked up in DeFi, people lending on a platform like Aave or Compound, or borrowing or inventing new stuff. And this is where I want to spend my time speculating on altcoins, is in the DeFi landscape. There's a reason we like Matcha as a partner, because that's where you trade them. Before they ever get to the centralized exchanges, this is where your opportunity is. So there's like tons of stuff that's looks really good. I'd rather play in those landscapes. If you go to a place like CoinGecko, they have a whole DeFi tab that you could click on, and you could just see like the rankings of DeFi coins themselves that are in their system, and compare those to the relative market caps. And if you're getting into crypto for the first time, you're probably going to hear about these. But a lot of people that were in crypto and are coming back to pay attention, like they're going to be so behind, because they're like, I don't even know what this stuff, like the hype is all about this time. Last time it was ICOs and whatever, and this time it's like DeFi, and you got to catch up basically. So that's my like 2 cents on if people are looking to speculate. Don't just think you can run to your prior, bags of choice and they're the ones that go again.
And another like point to bring home the DeFi stuff is we're seeing crazy APYs relative to legacy markets still. So this is USDC. These are the platforms you can borrow on or lend on. And I think a lot of the USDC prints we're seeing is actually a response to these APYs.
Yeah.
These APYs are a response to people using USDC leverage or using it in DeFi situations. DYDX,
So what you're showing is just people earning whatever, like 5 to 10% on stable coins, which is massive amounts relative to legacy markets, of course. But obviously you're at risks with smart contracts and software and all that stuff. So that's a lot of yield. Like someone in the chat, A Rose So their parents are earning 7% on one of these DeFi platforms with dollars, because you can't do that anywhere else in the world. You are at risk of the smart contracts and hacks and whatever else. But when you compare 7% to like 0.002%, or, you know, like whatever you earn, like just in a bank account, like this is pretty attractive. The other thing that's being done is things are being lent out and then borrowed for a variety of reasons. So like somebody might have a bunch of Bitcoin, they can use it as collateral in one of these and then borrow USDC and then go use those dollars as something in real life. So if you're a Bitcoin whale that doesn't want to sell or whatever, like maybe you could do that to use money with a little bit of leverage and go use it for something. And anyway, a lot of people are doing that. There's centralized versions of these too. Off the Hook asked us about like BlockFi. They can be pretty good. I did hear like on some of these from a lending perspective, you're limited to maybe like 2 or 3 Bitcoin, which I thought was weird because I thought whales were using this stuff more than retail, but maybe not. I don't know as much about the centralized versions. I'm much more interested in the decentralized versions because I think they're just so fascinating in what they are doing and offering. So,
yeah, keep in mind Celsius and all those other ones, not your keys, not your coins. On the flip side of that, just because it's non-custodial doesn't mean the smart contract itself can't get hacked. So there's massive risk there. So it's not without its risks, certainly. I just wanted to pull up DApp Radar for a second to show like Uniswap's exchange volume over the past 30 days is 17 billion. Pretty impressive for a DEX. Compound 12 billion, Curve 8 billion, DYDX 7 billion. So typically when I pull up stuff on DApp Radar over the 30-day period, it's in the millions, but that's long gone now. You know, all this is DeFi exchange stuff for Ethereum, which is why fees are as insane as they are on Ethereum. It's because this stuff is so popular.
And what's amazing too is it's not even just Uniswap. Like it's a lot of protocols getting a lot of volume. And there's a balance of liquidity and volume. I've noticed that liquidity on Uniswap, which has got the lion's share, if you think of it in older terms, it's like if you thought of Coinbase as the majority place of exchange, then Uniswap's kind of like that, the dominant one in the DEX landscape. They're all the way back up to their same liquidity that they had in the fall, except for when it was in the fall, it was all about these liquidity mining programs that were schemes for people to earn like tons of yield. And listen to past episodes of my YouTube videos about that stuff if you want. But the volume is 800 million a day just on Uniswap. 800 million a day. Like I know you said it in billions per month, but I'm thinking like just look at this trend per day, how much it's going up. Like it was 400, 500 a couple weeks ago. So tons of volume interest here and a lot going on. It is interfacing with these smart contracts has their risks of their own. You do have control of your coins. It's non-custodial, like we talked about with Matcha. You know, they do I think if they've done like $1 billion of volume too, just through Matcha. You have some smart contract risks. You have some blockchain-based risk, but when you're on an exchange, you have custodial risks. Like someone else has your coins, and you know you could be, I forgot the name of it, Cryptopia. You know, like, and your coins are gone. So you want to trust whatever you're looking at. Use the protocols if you're going to use them that have the biggest names and you know have been audited and things like that. What is this chart that you pulled up?
One other thing on ETH. ETH fees at an all-time high per day, 20 million.
Dang.
That was January 4th. So that's a few days ago.
I'm feeling this one.
Yeah. And then one last thing I want to bring up. Leo was talking about privacy coins and was asking if we think privacy coins are in trouble because of just delistings. I think they are in trouble because of delistings. I think Monero is probably in the most trouble. Price-wise, because it's the strongest privacy coin.
Yeah,
it does embolden the privacy narrative for Monero, but unfortunately, I don't think that's going to be bullish. If you know, you can't be delisted and be bullish on a coin, regardless of what you think of the narrative.
Yeah, I heard the exact justification for the Bittrex delisting was a little weird, but either way, you don't like your coin getting delisted. It doesn't matter.
No, so I think wrapped privacy coins are probably coming, even though that destroys the privacy capabilities of that coin.
Well, I mean, one of my favorite projects, which is not taken off a ton yet from a usage standpoint, but they're working on it. That's what they do, right? Like they wrap. Well, there's multiple things. You're doing two different things here. So you could take Monero, wrap it, and put it on Ethereum. So you have like WXMR, and it's not private as long as it's on Ethereum. But if you get back to Monero, it is private. There's other chains, like Secret Network is one that's doing this. It's small, but what they do is actually you could wrap all your DeFi stuff, because what people are also discovering is it's like, hey, my wallet's out there public, and like people see my stuff, and some person with $50 million or whatever, like people are tracking every trade of theirs. There's some platforms that are trying to make that private. So there's all kinds of different things going on there, but yeah, we'll see what happens there. There's a lot to think about. What do you want to leave us with in terms of what people should be looking for as we go into the new year?
I'd be saying look for a dip and buy it. Have a plan, have a trading plan. Be prepared to sell regardless of how euphoric people are, if that's your target. Be prepared for a dip and execute that plan. Be prepared for a poor outcome in Q1. Historically, this is not the norm. So this will not last historically. So unless it's different this time, which, hey, it might be, this will not last for Q1. So that's what I want to leave people with.
Yeah, and I think my thing is just that mean reversion is totally normal. It doesn't mean it's all over. What you see on Twitter is going to be people freaking out one way or the other, either out of euphoria like right now or out of absolute fear. No need to get too emotional or too upset. If you have to not look at your balance and whatever, don't look at it. Think of it more in the longer term. I think we got a good bit longer to go in this market, but we're running pretty darn hot right now. There's tax implications for everything that you do, so we're not trying to advise anybody on how to approach the market, but we're obviously in a bull market. It's an exciting time to be in crypto. We're seeing a lot of attention, and sometimes these things can get quite extreme, so we'll see what happens, but we're looking forward to people hanging with us and being with us for this market. And if you want to follow along, you can follow me at Ledger Status. You can follow Josh at Carpe Noctem on Twitter. We'll put stuff there, charts, things we're thinking, all that stuff. Both of us have YouTube channels where I know you're putting tons of content out. I'm about to start hammering some more out. I'm getting tons of questions about like specifically trading on decentralized exchanges. So I'll be putting out like a matcha specific video. And if you are looking to use a DEX, if you're not using matcha, you're costing yourself money. Their fees are lower. They pull from different exchanges or different pools. They aggregate different pools. So whether it's Uniswap, SushiSwap, Kyber, the 0x protocol, they pull from all of them for when you trade there, and it's got a great interface. So go to ledgerstatus.com/matcha if you're looking to make your first trades on a DEX. We're looking forward to being with everybody next time. Thanks for coming. Hope you're having fun. Protect those profits. We'll see you next time. Give the show a rating and a review. We love those.
Monuments crumble in the blink of an eye. The easy river has just run dry. In a house of cards, I feel the breeze wound so tight I can barely breathe. Oh, the chains, oh, the chains, Lord, the chains, come release me from the chains.
All right, we're out. Thanks, everybody, for